All right, traders. Good morning, traders. Welcome to my screen. You're welcome to yet another episode of Forex Cut Weekly Forecast with Daniel Ekeru. And in today's episode, we're going to be looking at GPB forecast for the week, South directional buyers for the week and beyond. This is 2025, and the market has been doing great and amazingly well. Guys has been really packing out good funds from the market this year so far, despite how terrible and messy Donald Trump government could be. And trust me, this week is going to be a good week and is looking promising from this side, looking promising from what I can see right now on my chart on GBPUSD. So in today's video, what I'm going to be doing is that I'm going to give my projection for GBPUSD for the week and beyond. So we're going to be doing an overall projection from higher time frame. So that's what I'm going to be doing. We're going to be scaling up to a higher time frame to be looking at GBPUSD projection for the week. So what strategy are we going to be using for this analysis throughout this video? So basically, we are going to be I'm trading XMC, my strategy, smart money concepts, and I've been trading this for a year now. Though I've been in the forex market for a space of 3 years, and trust me, it has been 3 years of consistency, 3 years of work, 3 years of patience, 3 years of growth, 3 years of growth. Trust me, it wasn't an easy journey. I've got the experience, I've got the knowledge and the mastery in this game. So that's why I'm standing right here, and I have an edge in the market. It's the smart money concept strategy. So that's what I'm going to be using throughout this video in all of our analysis. So basically, what are the things we want to be looking out for while making use of our smart money concept strategy? Number one, we must have a basic understanding of market structure. Two, our order blocks identification. We must know how to map out our order blocks in the chart and how to spot them in areas of supply and areas of demand. So when we're looking at buying, when we're looking out for a buy structure, when we're finding our order blocks at our areas of demands, and when we're in a bearish market, we want to be looking for our order blocks at areas of supply. So that's just how simple it is with simple market SMC strategy. And next one, basically one of our basic criteria in smart money concept strategy is our FEG or imbalances. FEG or imbalances, very, very important. Number four, liquidity. So when we talk of liquidity, basically it simply means the money, basically the bloodline of the market. We want to know where the liquidity is coming from and where the liquidity should be deposited, or where the liquidity is coming from and where it is heading to. So we want to pay attention to that. So key areas of our liquidity can be seen our entry points, or probably our stop loss levels and our take profit levels. These are key areas and levels of what liquidity. Liquidity also lies as heavy swing highs and swing lows, and a whole lot of them. So in our subsequent videos and with time, we are going to be exposed to all of these things. Number five, equilibrium, premium, and discount zone. So we must have this in our checklist to have a good trade and an A+ setup. So without any further ado, guys, let's dive in straight up to the video. And please, guys, if you find the video helpful, please do well to like this video, do well to subscribe, do well to turn on the bell notification icon, so that whenever we drop any new video, you'll be very first to be notified. So guys, I'm going to give you 5 minutes for this. 5, 4, 3, 2, 1. So please, thank you so much, those of you that are subscribing, and those of you that are yet to, please, God bless you so much. So let's dive into this video without any further ado. So alright, so I want to quickly talk about a basic market structure, as I said. So when we're talking of basic market structure, because that's our number one criteria for our smart money concept strategy. So we want to be basically looking at the market condition and the trend of the market. Yes, we want to basically looking at the market condition and trend of the market. Mind you, we only trade a trending market. We don't trade ranging market. Basically, there are two types of market. We have a trending market and the ranging market. So for us as trader, we only trade the trending market. We don't trade the market when the market is ranging, because we don't want to be losing money. When the market is trending, there are two types of trending market. Is either bullish or bearish. So this is just an example of a typical bullish market structure, where the market is giving us series of higher highs and higher lows, 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 and subsequently and continuously. Every higher highs in a bullish market structure is always broken, while the swing higher lows are always protected. So stop losses are often kept below these levels. Stop losses are often kept below these levels. So you can see all of these swing lows. Stop losses are always kept above all of these levels, and so many times the market makers will always see that zones as what areas of liquidity. So that's just how it is. Why the higher highs are always broken. That's why we're having our what BOS and break of structures subsequently in a bullish market structure. So the next type of trendy market we have is a bearish market structure. So this is an overview of what the bearish market structure look like. In the bearish market structure, we have series of lower lows and lower highs, 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 lower lows and lower highs. Subsequently, the lower lows are always broken, while the swing lower highs are always being protected. So in the same way, stop losses are always want to be kept above the lower highs. Stop losses are always want to be kept above the lower highs. This lower highs, stop losses are always want to be kept below lower highs, since it is expected to be what protected. It protected in the sense that it can't be broken because it's a bearish market structure. So without wasting much time, let's dive straight into the chart on what we have for GBP USD. So this is GBP USD on a monthly time frame. So guys, this is GBP USD on a monthly time frame. Guys, trust me, GBP USD is actually looking really juicy for the week and beyond. GBP USD is actually looking juicy for the week and beyond. So guys, for the sake of this video, I'm going to give you my directional bias for GBP USD on a monthly time frame and what we should be looking at for the next few weeks. What should be looking at for the next few weeks, because trust me, GBPUSD is on the run and it still has more pips to cover. We still have about 800 pips to target. So guys, if you look closely at my chart, what I have right here on my right hand, on the right hand of my chart is a diagrammatic representation of what I've cut out from my chart. So most of the time, when I do these diagrammatic representations of my analysis, why do my analysis is basically to give me that clarity on my perspective, on my look on the chart, because trust me, the chart and the candlestick chart is not 100% perfect. So why I do this diagrammatic representation most time is basically to get clarity. Like it's basically to give myself that perfect picture view. You understand? So I can be able to know what to do, and the next line of action, if it's to press the buy button or probably the sell button. So without so much talk, let me give you a breakdown as to how I get to this level on my chart. So I'll be deleting every info on my chart right now, and I'm going to be walking you guys through step by step guide on my analysis, on how I come about my bias on GBPUSD for the week. And guys, trust me, GBPUSD is screaming bullish. Alright, so guys, this is GBPUSD on the monthly chart. So basically, we are going to be doing our analysis from the higher time frame, then we'll scale down to the lower time frame. Basically, we're starting from the monthly time frame, then we'll scale down to the weekly, then daily, 4-hour time frame for our entries, and 1-hour time frame or the 15 minutes chart. So basically, why we are here on the monthly time frame is that we are basically here to do get our directional bias. We don't trade on the monthly chart because we don't have all the big funds, just like the big traders and the big boys in the game, who stays on the monthly chart and weekly and daily time frame to execute their trades, because they have large orders and large amount of capitals. So we are just mere retail traders and want to be sitting on lower time frames so that we can actually utilize our capital very well. Yeah, we can actually utilize our capital. So while we are on monthly chart is actually we are here basically to get the flow of the river. We are here basically to do what the big boys are doing. So you don't want to be buying while the big boys are selling, and you don't want to be selling while the big boys are buying. So you get it. So we are basically going to be doing our top down analysis on the monthly chart, then we'll scale down to the lower time frame for confirmations. So basically, since 2002, GBPUSD has been 2006, late 2006, GBPUSD has been screaming bearish for the longest time. So this market is looking bearish on the monthly chart, but is out showing signs of a bullish reversal from the higher time frame. From what I can see is that we have seen signs of bullish reversals, and throughout 2025 we all know Gbpusd has been bullish for the past 5 months. Gbpusd has actually been bullish since January. So now the very first thing we are going to be doing is to be taking our trend line to see if we've had any sort of breakout of the bearish trend. So we are just basically to get to pick about 2 touch points from the bearish trend. First touch point, and we have this as the second touch point. All right, and we extend. So we have first touch point, second touch point, and then we extend, and we can clearly see that Gbpusd has actually broken out of this long-term bearish trend. It has actually broken out of this long-term bearish trend. And if we extend, if we should draw the trend line this way again, we could probably see that this is a clear breakout and a sharp retest so around the zone. This is a clear breakout and a sharp retest. This is a clear breakout and a sharp retest. A breakout and a sharp retest. So guys, without no doubt, Gbpusd is actually bullish. So now the next line of action is actually to know where this bullish momentum actually kicked off from, and that's why I want to be looking left. Whenever you're in chat, you always want to be looking left, because as to every move there's always something that actually costs it. So if we should look left, if we should shrink our chart, we will see that there's some levels there that Gbpusd actually reacted from, and that is actually a bullish order block. So this last down candle over here, you can see guys, this is very actually easy to spot. So this last down candle over here, this red candle, this last down candle over here, before this impulsive bullish momentum was actually the order block responsible. Let me clone this and put it at the open and then the high and the low of the entire candle. So we can see that last down candle there, that last red down candle is our bullish order block. And you see, immediately we had that bullish order block, I saw this impulsive move and price boomed up. Then price actually danced around for months, for years, and finally in 2025, or I think somewhere around 2023, price tapped into the order block around this zone. You can see, just pay attention to my cursor. Price tapped into the order block around the zone, and ever since then price has actually been on the boom. So without wasting much time, I'm going to, from this price point, we are going to be having, okay, for better, let's delete this. We are done with this trend line. So we are going to be looking at our structure, and we're going to be drawing it diagrammatically. We are going to be representing our structure diagrammatically from this zone. So let us look at what the chart is actually saying. So let's take our part 2, and let's read the chart information from this zone up to this very moment. Let's see the information from this zone up to this very moment. So from this low, let's just take that low to be this, because the price gave something like this, then price pushed up, price gave a low, then price pushed up again a little bit, it didn't push up too much, then price gave a low, then we will see that price pushed up, then before price rallied into that order block and actually swept liquidity, or made some sort of liquidity grab into that order block. So for us trading smart money concept, this is actually normal. And then we got the confirmation, the bullish rejection, and we saw the rejection candlestick, and then we had a push up, a little retracement, we had push up again, we had a little retracement, then we had a push up, didn't get up too much, then we had something like this again, an inducement. We got an inducement before we finally got a break of structure. When we got the break of structure, price actually retraced that, swept that liquidity or the inducement and tapped into the other block responsible for that break of structure. Then after that, we got our boom. Now we've actually got our boom, and we are at this level. So let's actually extend this. This is actually seen very much above this. This is actually further. So guys, this is what we're actually looking out for on GBPUSD. This is a pictorial view of what we have currently on GBPUSD. So the next line of action for us now is actually to look at our key levels of resistance and support in our chart. So we should shrink this using our line to our horizontal to ray. These are most recent key level that price is likely gonna head to. You can see that level that has been was actually a support level, support here. Then price broke out, and that has now turned into resistance, and that's first touch point, second touch point. So we're expecting that GBP is actually push into 1.14884. Next level target for GBP. We are expecting that GBP actually rally all the way up here. We're expecting this guy to actually rally all the way up here. That's next level target for this guy, GBP. But at this point, we still have about 800 pips to go. About 700 pips from this zone, about 1.31487 up to around this zone. So we have about 700 pips or thereabouts to go. So you can do well to do the calculations on the comment section and drop it to me. So guys, if you find this video helpful, do well to like this video, turn on and do well to subscribe, turn up the bell notification icon so that whenever I drop any new video, you'll be the very first to be notified. You'll be the very first to be notified, guys. You'll be the very first to be notified. Thank you so much. Thank you so much. So guys, so let's continue. So guys, so this is a diagrammatic representation of what we have currently on our chart, and you can see this actually I've actually made our work super easy. Now let's move to our market structure mapping. Ever since price tapped into this order block from this higher time frame, our monthly order block, we got a clear and valid break of structure. So these are acting break of structure on the one hour time frame, on the monthly time frame. This was our break of structure on the monthly time frame. You can name that our break of structure, and you can see this was actually the order block responsible for that break of structure, the origin responsible for that break of structure, and we got some sort of liquidity here, some sort of induced liquidity. Inducement liquidity there, and then we are seeing that price actually was pushing upward. So guys, if we should represent that same thing on our chart, if we should represent that same thing on our diagrammatic, you see that we have that break of structure here. You can see we have that break of structure here. For the liquidity, we've gotten that liquidity here. You can see, guys, this is actually easy. We got the liquidity here, and we've got some sort of demand zone here where price actually tapped into. We got the demand zone here where price actually tapped into. So that was the demand zone where price actually tapped into. Sorry for that, guys. So this is the demand zone where price is actually reacting from. These are demand zone where price is actually reacting from, and we can name this clear demand zone. So you can see that's where price actually reacting off. Let's visual that. Let's give it to back, send to back. Let's send to back. So that's the demand zone where price actually reacting off from, and price is actually heading for this monthly supply zone. Price actually heading towards this monthly supply zone. So guys, as on deck, there is more funds to pack out. Price actually heading forward to this monthly resistance level. So guys, let's send this to back. So guys, our eyes on deck, price actually heading towards this monthly resistance level for GBP. So we still need more push to this blue bar around 1.148 1.41884. So I have about 700 pips all the way to that level. So these are clear directional barriers on the monthly time frame. So now let's get down to the weekly time frame, to the weekly charts. Let's see what we have on the weekly. It's still looking bullish, so we are still looking at price should retreat into some sort of demand zone before we get the push again. Let's check the daily time frame. What we got there on the daily time frame. On daily time frame, all right, from daily time frame, so we've gotten our most recent break of structure here. On our daily time frame, we've gotten this as our most recent break of structure. Is our most recent break of structure on the monthly time frame, and the other block responsible for that break of structure is no other than this last candle before the impulsive movement to the upside. And currently we can see that price is actually at the other block responsible for this break of structure on the daily time frame. So guys, the question is, will this other block hold GBP/USD? So guys, I'll stop here for today. If you find this video helpful, in the next playlist, check my next playlist, I'm going to be dropping more analysis on GBP/USD. I don't want to make this video very longer, so just watch out for part 2 on GBP/USD forecast. So until then folks, peace out.